All right, one of the things I see more often than I think you would think is real estate agents and team leaders commingling their business and personal accounts. And I'm going to talk to you today about why that is something we want to avoid. I'm Andy Mulholland. I'm a retired real estate team leader, and now I run Simple Numbers, a real estate bookkeeping and financial reporting business for real estate businesses. And I help people increase their profitability. Now, as you know, bookkeeping is the language of business. It tells us what's going on in our business. And if the language isn't right, if the numbers aren't accurate, the inputs, then it's not going to tell us the right information. We're not going to get the information we need to make better business decisions, become more profitable, and ultimately gain more freedom from our business. So, one of the things that might surprise you that I see real estate agents and team leaders doing is that they have one account for both business and personal. When they have a closing and the commission dollars get deposited, it goes into one single bank account, typically a personal bank account. And all of their business expenses and personal expenses are all coming out of that one account. Now, let me tell you why that's really a problem. And I get it, because when we're a brand new agent, right, we start selling real estate like I did back in 2008, we've got a bank account, and it's typically a personal bank account. And we start selling real estate, and the deposits get put into that bank account. Then all of a sudden we're growing and we're starting to spend a little bit of money, and we're spending it out of that bank account. And we never take the time to set up a separate business entity and separate business bank accounts. All of a sudden, it's time to start a team, and we bring on even more expenses, and we still don't take the time to set up that separate bank account. Here's the problem with doing it this way. Number one, you lack huge insights into that true health of the business when all of our personal expenses are going through that same account. When we just have business and personal in one account, we really miss understanding what's truly going on in the business. Okay? How much are we actually spending? Where is that money going, and how can we calculate return on investment? It's really hard to do when we have a lot of personal expenses coming through that same account. Second, we lack clarity on the personal side of our lives as well. And I think what happens is we end up wasting a lot of money. There's a lot of money spent, I think, because mentally we think, well, it's all business, and so I don't feel guilty about spending this money. Going on that trip or spending the money on that new thing, that new widget, whatever it is, if it's really truly personal, I don't usually feel about it because I can say, well, it's a business expense. And then the third reason is because the IRS does not like that. If you're truly running a business and you've got a lot of expenses going through, and the IRS sees that it's all in one account with your personal stuff as well, man, that really makes you much more highly likely for an audit. And so you got to be really setting and structuring a business with an entity like an LLC or an S Corp or some other entity structure. Talk to your CPA about that. And then separating bank accounts. So if you want more information and helpful tips like this, visit our website, check out our vlog, simple-numbers.com. Thanks much.